everyone. My name is Vivek Bilgavi. I look after FinTech as a practice within PwC. I look at myself as almost an observer of trends here. So we started focusing really on FinTech a couple of years back. It has taken a life of its own. It's a very pertinent topic in most of the boardroom conversations. It's become a pertinent topic in state, cities, center, government level conversations. It's a big topic in investment conversations and people who track investments and equities and trends like that. In India, and the place where we are in right now, I do think the business imperative and social imperatives do go hand in hand. If I look at all key product penetration metrics, whether it's for investment products, insurance products, banking products, we really got, and including like bank accounts, so even with Jan-Dhan, we have got a lot of adoption which happened really, but when we look at how many accounts are getting transacted, the numbers are still not as high as it should be, and it's for a country that is growing at 6 to 7% GDP, and the ambition that we have, it is clear that we have to have inclusive growth. It's clear that we need to have inclusion as heart of our agenda. And for us, inclusion goes beyond what we see in rural markets. I argue that if you look at wealth advisory, a lot of people in this room are unincluded. We really do not have like consumer first, investor first advisory platforms, and which shows in how much adoption really has happened there. So there's a fair bit of opportunity out there. What is I find truly exciting is a variety of players we have had in the ecosystem. We would have social media giants, we would have e-commerce giants, we have incumbent organizations. So it's just a variety which is out there. So I equate it to saying it's almost Darwinian. When we don't know the answer to a problem, then your best bet is to really have a variety of folks and seeing that someone could move it forward. So with that kind of a broader construct and linking back to the theme of this panel, I really want to start, Mr. Lime, I'll start from you and then move here. Really from opening remarks, where do you see opportunities? And where we really want to spend a little bit more time is, and especially with the leaders we have on the panel, is to think through what kind of environment do we need in this country. And we already have had pretty clement regulatory as well as investment environment. But what more needs to get done? I think that's really the meat of the matter we will get into. But probably we'll start with some quick remarks on where do we see opportunities. Try to keep it as real as possible, because this is a topic which can be, which is susceptible to a lot of hyperboles, but keep it as real as possible, which I would expect from my panelists. And Mr. Lime, really opening remarks from you, and then we'll go across the table on where do we see opportunities, and what are the top couple of things we should be looking at supporting this ecosystem.
Okay, thanks very much for inviting me. I think it's, when you look at the landscape, as you pointed out rightly, the penetration levels in financial services are still pretty low. So if you were to look at just the equity markets as an example to start with, since we want to be focused, your penetration level is about 5%. That's significantly lower than even emerging market averages, which is about 13 to 15%, and in the developed markets, it's around 35 to 40%. So while we believe in our country, and rightfully so, that the equity markets are relatively well developed, we have a long way to go. And we have to find better ways to intermediate savings into markets more broadly defined. And while the equity markets are relatively well developed, the other markets are still at a very early stage. So whether it's the bond market, commodities, currencies, credit derivatives, interest rate derivatives, all these markets are, many of them are non-existent, the others are at very early stages. So I think the opportunity is very large in terms of intermediating savings into markets and market-related products. And the reality is that unless we get market development right and expedited over the next couple of years, I do believe we would be seriously compromising on the long-term growth prospects for the economy. Because I don't think you can grow at higher growth rates. I mean, we're growing at 7%, which looks great. I don't think is sufficient for what the country needs. But if you want to grow at sustainable higher rates of growth, you need alternate channels of capital, alternate sources of capital, all the right instruments for the real economy to participate, better penetration of retail savings and intermediation into markets. And so from that perspective, I think it's very critical for us to get market development right over the next couple of years. So I'll stop there. We can get into more details later, but the opportunities are many across markets, equities and other markets. We've just launched an app few days ago to try and get retail savings into government bonds. Okay, that's just one example of a recent technology initiative to get retail investors to participate in government bonds. We obviously have many other initiatives to try and deepen the penetration in the equity markets. But I'll stop there and we can pick it up later.
Sure. Thanks, Vikram. Mr. Agarwal, your views on this?
Yeah. Thanks for the invite. And the subject is, I thought one of the biggest innovation and biggest growth we have seen is, I started my career in '87 when only BSE was there. The advent of NSE and why NSE came, and they actually used the then prevalent technology instead of the art technology, the screen. When I saw the first time screen, I couldn't believe the whole market could be reduced to a screen. There was disbelief for some time. But you see, it has changed the complete landscape of Indian stock market, which was so primitive between 87 to 93, 94. And then second innovation which happened was the SEBI. In fact, BSE members, they went on strike against the formation of SEBI because they wanted registration of the members in SEBI. And both these combined, the transparency it brought, and the regulations it brought, and the discipline it brought, and the technology which NSE provided, and absolutely transparent, and it was nationwide, state of the art. And with that, the technology also developed, the computing power developed, telecom developed, and we have most wonderful market in the world. So growth constraints have to be removed. First thing is there should be growth potential, and why the growth potential is not going through, that has to be understood. And then you remove methodically the growth constraints. At that point of time, ministry, Mr. Manmohan Singh and all, they could realize that BSE guys, they are not able to meet the demand of, surging demand of this growing country. So they found that they're not willing to change, and hence NSE came. And it was a huge innovation at that point of time. So I think we have to see what are the big problems in the financial markets. Say like global savings wants to flow in here, but the kind of, in their own right, the regulators and everybody, they keep bringing the safety walls and things like that. Can it be, like for Indian investors, we have been able to reduce now we can start trading what used to be 7 to 10 days. For even my own brother or somebody, now it is reduced to 15-20 minutes. We promise in Motilal Oswal that in 15 minutes you can trade. Yeah. But that is for domestic investors. For the foreign investor, still when I go to New York and all, people say, we are waiting for 2 years, we are waiting for this and that. So can it be reduced? Because that's a huge potential for India, and it can get very precious foreign exchange, and market can expand big time. So we have to see where is the growth opportunity, and hence remove the growth constraints in whatever way, using technology or regulation, transparency, whatever. So that, I think, is a way to approach.
Interesting. Mr. Tandon?
So I'm going to echo what Vikram spoke about in terms of the fact that there's a huge opportunity out there. So if you were to just look at some numbers, you have about 50 million odd income taxpayers, but if you look at people who have PAN cards, you have about 360 million. So clearly there is the fact that you have 310 million, or let's just round it off, 300 million people who are just not being able to, in a sense, access the financial system. So you have to find ways in which they can access the financial system and kind of use. Now, whether they come in as borrowers or they come in as savers or as investors, when they come in as investors, is it on the debt products, the equity products? Could it be certain commodities like gold, which they are in favor of? We have to find ways. Now, in this, one of the things which kind of comes back to me is you go back and look at some of the innovations which were made by the FMCG companies. When they kind of started off, they had large, 200 milliliters, 250 milliliter, let's say a shampoo bottle. But their growth pickup happened when they actually moved that from a 100 rupee bottle to a 1 rupee sachet. And that is what we have to find ways of doing. Now, I know the mutual funds have kind of started it when they say that there's an SIP and you could start it with a lower amount. But and that is just one of the innovations which has happened. So you have to kind of find similar ways in which people can bring in more and more of the population into the system. And again, while you could turn around and say that took financial, five producers are just one aspect. You also need to focus a little bit on the infrastructure. So while we talk about a lot of the products being delivered through smartphones, you need to recognize that it's primarily an urban city phenomenon. Yeah. Can you take it to the tier 2 and 3 cities? Can you take it to rural India? And for that, the cost is important. And in that context, some of what is being happening with Jio, where they're saying that, okay, cheaper handsets, which go out to the rural areas, which are more affordable, which then have these services embedded or the apps embedded on them to provide the services. That is the way we need to start thinking about it. I'll kind of speak a little bit more about some of these things.
Mr. Kumar, hearing the trends and really coming as an observer from outside in perspective, where do you see are the opportunities and where do you think that we as a country might be missing a trick?
So I think FinTech is extraordinary broad term, and perhaps what we should consider about is what can technology do more efficiently what we're currently doing, and then is there a technology that creates a new service that perhaps hasn't been there before. So if I think about two examples of doing something better that we already do, the regulatory environment for global financial institutions has got significantly tighter post the GFC, which requires a huge amount of due diligence, KYC, record keeping. And at the moment, when you look at most financial institutions, they're doing that very inefficiently. And it seems to me that, you know, to robotize that makes a lot of sense. Because that's the only efficient way that you're going to do it without making your service too expensive. So it takes you through your compliance questions. It makes sure that it understands the risk tolerance. And by doing it in an automated way, you then develop the record. So when you go back and say, well, actually, that client did want that risk appetite, they can't deny it because you couldn't find the papers. So that's one system. The other is where it's not the bank that's improving a service that already goes on, it's a new disruptor. So there's a company called TransferWise, I'm sure you've come across them. So I had an example recently where I have a convertible bond in an Australian company, and that company was trying to pay that coupon to me from an ANZ bank account to a Singapore bank account. So Australia, Singapore, they're relatively sophisticated places. They used the SWIFT network. It failed 3 times. They needed 4 intermediary banks because the way it's done. So SWIFT is the most ridiculous system. You send a text message. Yeah. You know, TransferWise are offering immediate cross-border payments. And I think the banking system really runs a huge risk here. You know, the basic transfer activities can be done much more efficiently. And I think to some extent banks are now responding to that. Now, in terms of new services, I came across one which I thought was really interesting. It's very difficult to persuade millennials to save. You know, and millennials, particularly in the developed world, often leave university with big debts. They go into a property market that just looks unreachable. And so many of them have just said, look, not going to have a family, I'm going to consume, live for now. So this is an interesting service where they get you to sign up and they give you more information on what you're spending your money on. And then you enter into it saying, okay, every time I spend 100, it was Swedish krona, it's a Swedish company, 100 Swedish krona, 9 Swedish krona is going to go into my savings account. And then they're recording a lot of videos explaining different asset classes, etc. So I think there's a lot of really exciting ideas here, and I particularly like that one because it's solving a very important problem. And there's a complexity around it because you need to educate, you need to motivate. So I'm excited by FinTech, but I think we've got to get specific in our examples. And sometimes it's going to be existing financial institutions who will probably be doing it more for survival, self-preservation. Yeah. And then there's some really interesting disruptors out there.
Interesting. So I'll just take a cue from what you mentioned, Mr. Mowat, which is, and if I look at, when we look at fintech trends in India, for the longest time, by any metric, whether it is amount of investments getting into it or valuations, payments far outshone the other sectors, right? And when we look at payments as a space, all the incumbent banks didn't really need any kind of a specialized payment license. I mean, the technology was there. The fact that that product need was there. But again, the bets started really coming in from the startups who really, like Paytms of the world, who really came and challenged the status quo. So the question which I really have is, again, linking back our topic of a conversation, do we need a very different mindset to solve this problem? Do we think as an industry, we think of everything very product forward? Because whatever we are doing is important. You need robust systems, you need good understanding of risk and control, so on and so forth. But a good product doesn't lead to an adoption. I mean, that's a learning that we are, including examples that you mentioned. You need someone who can think through consumer behaviors. And the work which I have done with FinTech, there is a lot of thought which gets into design thinking and just behavioral economics and thinking what will change consumers' adoption. Do we think the incumbents are well positioned to do it? Do you think that change is happening? Do we think we need to attract more non-traditional folks into this space? What would be the prescription of the panel on that front? And it's an open question for the panel.
I think you make a very important point, which is this behavioral one. How do you persuade people to change? And, you know, the banks make a lot of money because you just leave money in your current account. And, you know, we accept high transfer fees because it's just too much bother to move. So that there is a degree of educating, you know, persuading people of the benefits. There's a degree of trust. You know, if I use this payment network, what if it fails? What is my protection around that? I think with, you know, FinTech, I had a good example. There's a company called Bwengo, which is a company a bit like eBay, but when you sell your product, the proceeds of that go to a charity of your choice. And so I was looking at that company, and they would get 100 downloads. Mm-hmm. And then only half of those downloads did the person actually ever open up the app. Okay. And then you were down to about 15% before someone had actually signed up to it. And there's real challenges to break through that inertia. And that was, you know, something where you think people would have been motivated because it was for charity.
So a couple of things to keep in mind. I think one is, depending on what product you're talking about and what market you're talking about, there is regulation. So it's not a free-for-all that someone can participate like you're buying a T-shirt. Correct. It's not possible to buy a stock the way you buy a T-shirt. You have to go through a broker network. There are regulated entities that have to intermediate, etc. That's one aspect to it. Having said that, when you look at some of the data, we're seeing that, for instance, 25% of our volumes are actually coming from people who are doing internet and mobile trading. So while they go through a broker, they are using technology, they are making decisions to buy or sell what they want to do. They have to go through a regulated entity, but that's one aspect. The second thing that we found is that, for instance, out of, say, 50 million new investors that have been, added to the market over the last 5 years, 5 million, not 50. I mean, 40% of that has come from tier 2, tier 3 cities. That's another indication of penetration in markets. And so that's a good trend. But you balance that with the fact that financial products still need to be sold in this country. Yeah. They're not bought, which means that you require someone to educate the broader population about risk, about products, etc. And therefore, education is critical. And you therefore need to be able to scale up the knowledge quotient in the economy in terms of risk, reward, financial instruments, etc. So we're doing a lot on that front as well in terms of digital education, but that's the only way you will reach scale. And you've got to do it through interesting ways. So it has to be simple, for someone to understand, and it has to be done at scale. So unless you do that well, you won't get people knowledgeable enough to start buying. You will always need to sell. And when you need to sell, then there is a completely different dynamic to how products get sold, what products get sold, et cetera, et cetera. So you have to work on multiple dimensions in order to make this happen. You have to have technology to help educate, then you have to have technology to penetrate, you have to have technology in terms of ease of allowing people to participate in markets. And this has to be done in a regulated environment. You have to have the regulator keeping pace with what is required in order to facilitate intermediation of savings. And last but not the least, you need product innovation.
Right.
And you need simple products.
Absolutely.
Because given where we are and the penetration levels that we have and the understanding of risk and the understanding of markets, unless you have simple enough products, it's not easy to get those who are in products that they understand today to switch to market-related products.
Understood.
So you've got to work on multiple dimensions in order to achieve what we want to achieve.
Mr. Agarwal, I think you're part of this whole cohort, and it almost was a golden generation of investments in India, including when NSE got formed and entrepreneurs like you set up businesses. Do you think that trend has continued? Do we have more other than Zerodha and one or two others in the investment space? We've not seen as many. So again, linking back to the same debate that we are having, what would it take for more entrepreneurs to come into this space to just challenge the status quo? And do you think enough is being done by incumbents to challenge the status quo themselves, and in both ways?
Interesting. When I started in '87, it was, as I said, it was very primitive, and opportunity was, really abundant. I could see that, and literally we started with zero. Zero capital, no support, no angel investor or anybody. Literally with zero we started. And opportunity was crazy, and the guys who started with us, they have also done very well. In fact, you see what is the migration which has happened. All the brokers at that point of time, and there were 500 of them, and BSE was like a temple of broking. Not a single broker has survived. Those 5-10 you see, they're all our generation guys. When I got into stock market, chartered accountant to get into stock market was a taboo. Today, if you are chartered accountant not in the market, that itself is a strange thing. So that's the kind of change which has happened in 25 years. And coming back to the markets, what I have seen is that now, this is a change, that the power of the market has to be harnessed for innovation to become big. See, today, like say, Flipkart. Now, Flipkart is still making losses. We couldn't have been successful without making money even in first 5-10 years. Today, you can be actually loss leader. If you blow $1 billion, you are the best guy. So this is what the global market is offering you, unlimited capital. And you are talking about $20 billion.
You're too cautious if you're making money.
Pardon?
You're too cautious if you're making money.
Yeah, actually the valuation goes down.
Yeah.
So, so you have to harness the power of markets. And not only Indian markets, global markets. Why you have to list in India? Why you have to look at the jokers like us to value you? You can go to NASDAQ, you can go to anywhere, you'll be valued. So it is all about the innovation, power of innovation. And power of markets have to be harnessed. So regulators, and see the power that we want, political power, the ministries and all, particularly the SEBI, and they should be really thinking through, how do I use the global market power to entice the global capital here? Because global capital is very innocent, and they're looking for extra yield or extra profits, and they can bear the risk which nobody can bear. They're willing to blow billions. If you're buying a loss-making company at $20 billion, you imagine what kind of a faith that this company is going to make after, I don't know when they're going to make. And yet they're, Warren Buffett himself has bought into Paytm by paying $325 million for some 7-8% or 10%. Obviously, he has bought a ticket to sit in the board.
Correct.
This is not his serious equation. If he understands the game here, he is going to come with a serious bout of money. So this is a very different pace of capitalism. So if you want to really use the power of a new phase of capitalism, the regulators and the fathers of the market, Mr. Limye himself, could be one of them helping. But you have to think through. You have to be imaginative to harness the power of markets.
Understood. Let me just pick that and, sorry, Mr. Tandon, you want to weigh in?
No, I just wanted to come in. I think when we kind of talk about financial innovation, etc., there are two parts to it. One is the disruptors. And clearly there is only one big example here, which is Paytm. The others are kind of there making their way. But I think what we're doing is we're underestimating what the incumbents themselves have done to their businesses. So if you look at an ICICI bank or an HDFC bank or the others, in terms of the consumer experience which they are now trying to hand out, whether it is through their applications or whether it is when they're banking, whether it is if you're trying to take a loan, HDFC had this, that look, we're going to give you an approval over a short period of time. So I think we are missing that out because that is also being, fairly dramatic changes which are taking place there. Except that, it kind of gets dissipated because it's across a number of incumbents and there's no one player which stands out and is able to do it. And my own sense is that to a large extent it is because of regulations, which kind of is ring-fenced all these players and saying, okay, these are the guys who are in our camp and therefore we're going to support them. The guys outside, we're really not sure what they're doing. And I'll kind of, an anecdote from maybe 10, 12 years ago, and I pretty much think that still holds when Benchmark had started the gold ETF. It's a small product which you could kind of replicate in numerous ways. I think they waited for about 39 months before they got an approval to do something which the whole world was doing. So our regulators also need to get out of their mindset and saying that, look, we need to protect everyone at every stage from losing some bit, even 1 rupee. And the fact that, look, if someone is trying out something new, he must be having a motivation. Of course, everyone has a motivation, and that is to try and make a little bit of money. And there's nothing wrong with that if you're doing it the right way. But you cannot just say that, look, no, we are not going to let you do it for some time. So those two things need to change. There is a recognition that there is a lot which is happening, maybe not by the new players, though there are a lot of them in the periphery. The second is that regulators themselves need to change their mindset.
Correct. But just as a point there, which is what is true till now, and we have done few benchmarks on this, agility is where most of the incumbents do get challenged, and that is the fact of the matter today. If you are a startup, if you want to, not just a startup, if you want, let's say, so we're working with this one digital healthcare providers. They wanted to give insurance to their healthcare workers. It takes average 6 to 8 weeks from beginning to end for that whole conversation to close. Whereas if you go to an agile startup, you can see that conversation closing within a week. Right? That's a real difference of pace, which is still, I think, and secondly, the traditional mindset that I've seen is to say, availability leads to adoption, because that's the mindset we grew up in, because there was the land of scarcity. So very fact that you had water in front of you, you would drink water. But what we realized over a period of time is a financial product availability doesn't really mean adoption. Right? So you really have to work towards something else, which is where behavioral economics and the very fact that you have to apply that senses start coming in, so which is where my question was coming from. But probably to shift gears and picking up on global market example Mr. Agarwal was mentioning, the capital markets can also play a big role in terms of creating access to risk capital for these experiments. It can play a role. But today, if I look at most of the startups that I am working with and monitoring, they follow a typical cycle of either starting with the friends and family round, going with the angel network, moving on to Series A, Series B. And within the VC setup Series A, there are only those 5-6 guys who really have a time of the day. So it is a lot of folks chasing only a few people. Do you think this possibility, have you seen, Mr. Movat, elsewhere where capital markets has played a bigger role in creating access to risk capital for startups at this stage? And do you think some bets from a governance and regulation perspective is possible where we can create access to capital for many of these startups? A broader question to the panel.
I think the short answer to that is no, because the nature of venture investing is that you will have a narrower group of people that do it. And either they're very professional venture funds with a broad portfolio, so hedging your bets through having a broad group of companies you invest in. But then those venture capitalists also require a lot of flesh from the companies they invest in.
Yeah.
And so I think it still probably makes sense if you can fund through friends and family initially, rather than go down the venture route. But there isn't going to be some amazing solution to this because...
Sorry to interrupt, but my question really was, can capital markets play a bigger role in this segment? So today, capital markets really comes into play much later in that journey. Is there a possibility for it to come earlier in this journey was where my question was?
I don't think so, because just the nature of venture financing. Now, it will have on the margin an effect. The existing players that fail to respond will be punished by the capital markets. Those that are responding well will get a higher valuation. So I think you can see that, but it's really difficult to see it coming in, because if it could be done, it would already be going on in places like the United States.
Sure. Okay. Mr. I think you want to comment.
The point I was saying was that, when it's a place of greed. Greed is good in the market, and it's a global greed. I mean, 10 billion is smaller than like 20 billion, that kind of thing. It's all now, new million is a billion. So what happens is one guy makes money. I remember in 2003 to 2005, Bharti Airtel got listed and they had a tough time, and then they got it going, the mobile phone. It was the biggest innovation in India. We didn't have phones. For this country of 1.3 billion, we have 50 million fixed phone lines. And I'm talking about 2003, 2004. And there was no way they could put up those phone lines. So this was unconnected country in 2003. Today, we have more than 1 billion phones, thanks to the innovation of cell phones.
Correct.
Now, I could see these guys are going to make tons of money. That was in 2003. $25 price. The stock went from 25 to 1,200 in 3 years. It created one of the biggest disruptions in the market cap creation, the pace of market cap creation. That led to 2G scam. Every single joker in this town, they wanted to get a license, and they got the license. And we created all the mess here. So the greed of market cap is unbelievable in India, and I think worldwide is even bigger. So, and the money is blind. So, not at the VC stage. But what happens is that that success of one big guy led to the seeding of 17 licenses. So this is what happens. If you see one guy successful and he's got market cap, like say Uber got market cap. You saw how many taxi company came in India. Now Ola is also actually competing. So this is because Ola is not listed, now they've got the market cap. But Uber has got market cap globally. And hence, Ola also got some competing market cap. And I don't know how many more Olas, 1, 2, 3, 4 got done. So I think capital market has a very, very important role to play. And it doesn't work directly that, can I go for $500,000 to the markets? Of course not. That's not possible. But markets finally have huge role to play for, the guys to become...
The scale-out guys.
And the ITNs to actually dedicate their career. Because ultimately, it's not the money that important. Somebody is risking his prime career at the age of 25 to become entrepreneur and stack his 10 years, that prime time, to take up whatever he loves. And that comes out of the greed of creating, sale value or market cap.
So I don't think markets will have a role to play, but one of the missing bits in the market is that, after you've done your first round of funding through family and friends, there is no one actually to give you a Series B and a Series C. That market actually is suddenly very, very shallow. So if we have a way of developing that market, that look, there is something which is kind of moved from proof of concept to some basic execution, and now I need a little bit more money to kind of scale it up from here to here, and then from here to here. That is the missing bit. So we need to be able to find more and more sources for that. I'm not sure whether it's the markets will do it, but certainly there should be family offices, some of the institutions themselves, some of the companies, finance companies should be able to fund some of these ideas.
Interesting.
There are actually interesting models that have been developed in terms of platforms that will finance early stage investing before you actually tap the capital markets. So those are interesting ones to look at, because these are small sums of money that are being raised, so you can't go to the public markets. At the same time, they are essential for growth of these startup companies. Second, these are also platforms that would therefore give liquidity to early stage investors. and enable angel investors to recycle capital into new investments. So there are interesting platforms domestically and internationally that are actually focused on this part of the spectrum from angel through to a stage where the company can actually access the capital markets. And that's important not only in terms of technology investments that we're talking about, but in general about trying to find transparent ways of developing private markets. When we're talking about markets, one is capital markets in the sense of listed companies and public markets financing mid-cap, large-cap, small-cap, but of a certain size. Then there are platforms that are essential to provide transparency, price discovery, the ability to raise money for private assets. And that's also an equally important area to focus on, because otherwise the process of raising private capital is very tedious.
Absolutely.
So if you can make that more efficient and get a marketplace to do that, in the traditional sense of having companies that want to raise money and a set of investors that want to invest and get some sort of price discovery done in an efficient way, that is also an important aspect of providing access to capital.
And I felt like the capital markets has developed a lot of intellectual property as well as experience in really putting transparency, spreading right information, like all those things are still relevant in private investing, and it's just a matter of how can we innovatively deploy what has been used in a very different space for this space. Why allow, I mean, if you look at crowdfunding, why can't crowdfunding become part of some of our platforms? So why should it be a niche sector? I mean, those are the thoughts. Probably one has to look at differently to solve a problem. You do the same thing, probably you'll never get a different solution. That's where the thesis was coming from. You want to add something? And one question, another question for the panel, but
just
please. Yeah.
One sec. I mean, I was writing somewhere, and I realized that actually the failed companies, I mean, see, mortality rates are very low. In this, the 1 out of 100 they fail, or probably 1 out of 1,000 only succeed, and 9. But those failed companies, they create more jobs in the economy. And this is what the planning commission and whosoever that be, they don't understand that we must encourage failure. We must have millions of companies fail because they fundamentally, nobody works free of cost there. So that job creation is a continuous, and that's what is there in America. And a failed guy is not a bad guy. But here, that failing is not, socially also it will take some time, but the taxation, the regulation is so bad. Why do you need a fund to come in? Why can't I independently give 5 crores to somebody and start a venture? But then the hassle of the taxation and everything is so high. I mean, why do you have taxation at all for the guys who are less than 10 years old? For some size or something. Some crazy kind of attraction has to be given.
Created.
And there is nothing. I mean, you're not losing anything. It's just that if this guy becomes so much, why IT became so big? The biggest innovation India has done in the last 20 years, IT. I mean, from nothing, we've become 120, 130 billion, and the world is scared of IT from India. Why? Because you gave 10 years tax-free software technology park scheme. And some crooks came. But you produce Infosys, you produce TCS, you produce Infosys. Correct. So focus on what is good and not on the bad. The regulators are always worried about you misuse that misuse. So I think that environment is very required, very strong.
Great point. Other question which I had was really, when we talk about fintech and innovation, natural instinct is to start thinking retail, whether it is in terms of small investments, payments, so on and so forth. But there is a fair bit of disruption possible on institutional side as well. You did mention bond markets, and there has been like steady, and especially as we are promoting the SME sector, we would want them to start tapping into bond market for some part of their investments and capital needs. So any views on that? Do you think it's susceptible to disruption? Do you think there's an opportunity out there? Would we want newer folks with risk capital to come and take bets there? Or are there natural inhibitors stopping newer guys to start coming and playing that market? Just your views on slightly more institutional side of things and non-retail side of things, let me put it that way. And is there a potential there?
I think there's a huge potential there. You've got, once you've got large companies that can use the very traditional investment banking route. But as you start to get smaller SMEs, they just can't do that because the fees that would be charged relative to the capital raise make it uneconomic. And it seems to me that you could have, robo investment bankers, the legal documents around a bond are very generic, right?
Right.
The analysis you do is also quite generic. And I think where there are large fees, there are always going to be opportunities. And I think that would be very good for creating a more entrepreneurial environment.
Understood.
There's one technology-led platform that's been developed particularly for financing SMEs in terms of bill discounting.
That's right.
Called Trades, right? So we've also got a JV to finance SMEs. And that really is a similar kind of technology innovation where you've got financiers lined up on one side, SMEs registered on the other side, and the bills get put up and people bid and the best rate clears. And that's a fast way and cost-efficient way for SMEs to raise debt financing than the traditional working capital route through the bank financing channels. And so I think you can find innovative ways of using technology to match a need in the market from an issuer of capital to a provider of capital. And there are various ways of doing that. The one I've given is one example of that. The other one, like I said, we recently launched an app to try and get retail investors connected into the government bond market. I mean, for the longest time, or a large part even now of retail savings, almost 50% goes into fixed deposits. And, why would somebody investing in fixed deposits not invest in government bonds of different maturities? It's a risk-free instrument and potentially a higher yield. But you have to then also facilitate an ability to get out and get secondary markets going for a retail investor to be able to efficiently get out. Not that a fixed deposit investor is necessarily looking at an exit and trading in the instrument, but he has to be able to get out of the instrument. So you have to develop the markets in a way that facilitates liquidity.
Cool. I think we're close to time. The time is up. Probably a couple of queries for the audience, and you can address it to any specific panelists you'd want to raise it to.
Yeah, I wanted to ask about blockchain technology that we can use in financial sector. Because blockchain technology is very secure and it can enhance those trading and all stuff. So
Sure.
What are your opinions?
I'm going to be controversial here. I think blockchain is a technology looking for a solution. Blockchain seems to be the most extraordinarily inefficient way of processing transactions, of recording what you own. We had a period of time where solving for Bitcoin was using more energy than the country of Austria. $50 to solve for a transaction. It's become very conventional wisdom to say cryptocurrencies are bad, but blockchain's a good technology. I don't think it's a good technology. I don't see why I'm going to trust something, that I own something because someone else is going to solve it because they're being incentivized to solve it. I'm happy with the National Depository. I'm happy with the banking system. I'll trust that more than I'm going to trust blockchain. I think it's 99% hype, but I'd absolutely love someone to give me a compelling reason why I should be investing in a blockchain process that really makes competitive sense.
Any other counter views to that?
The reality is it is early days. I think people are experimenting with it. We are also experimenting with it. We have adopted blockchain in a couple of different areas. Not the high risk, mission critical areas. You wouldn't do that. But you don't want to ignore what's going on around you. You want to try and at least be aware of what's happening, see whether there is application in some part of the value chain that makes sense. Experiment with it, see if there is really some tangible benefit coming out of it or not. But I would agree with Adrian, it is early days. It's not clear that there is an application for blockchain at size and scale in certain areas to dislodge traditional ways of doing business. But obviously, lots of people who are experimenting with it. Some have found value in certain areas. We'll see whether it actually scales up to potential.
I'm getting a lot of signs that our time is truly up. So I'll thank my fellow panelists. Great, nice conversation. I hope you took a lot away from it as well. The panelists would be available after the session. So if you want to have some deeper conversation, feel free to catch any one of us. Thank you again. Thank you very much. Thank you. Cheers. Have a good evening.